Hi, my name is Joanna and today I'll be sharing more on my accounting Mindmap. Accounting is the process of analyzing, recording, summarizing, reporting and interpreting financial information of a business. It can provide information to managers, owners, employees, investors, creditors, and also tax authorities. Some business organization types are the sole proprietorship, partnerships, and company owned by shareholders. There are also a few types of business, which are respectively manufacturing, trading, and also service. The first step to accounting is to analyze using the accounting equation and double entry system. Equation should always balance after each transaction, and it follows a few accounting concepts. They are the accounting entity concept, where owners and business are considered as separate business entities. The monetary concept, where we only record transactions that can be measured in monetary terms. And historical cost concept calls for us to record transactions for the actual amount paid, and they will not be adjustable due to inflation or market changes. So the accounting equation that we will use for the double entry system is assets equals liability plus owner's equity. Assets are properties of value owned by a business, and liabilities are debts owed by business to outside parties. Owner's equity, on the other hand, are owner's claims on net assets of business. Any increase in assets is debit in nature, and any decrease in asset will be credit in nature. For liability and owner's equity, any increase will be credit in nature, and any decrease will be debit in nature. Under owner's equity, it also includes revenue minus away the expenses. Any increase in revenue will also increase owner's equity, so it would be credit in nature. As of expenses, it would reduce owner's equity, so we would have to debit it. Any decrease in revenue will then we have to debit it, and any decrease in expenses we will credit it. Now that we know the accounting equation, we will go ahead to record the transactions into general ledger and general journal account. It will follow a few accounting concepts. The first will be the accounting period concept, where it states that the lifespan of business are broken into regular intervals, and financial statements are prepared at end of each accounting period. The going concern concept assumes that business continue to operate for a long time, and assets valued at historical cost and not at disposable value. We will now post it onto the general journal, where we record information in chronological order. Debit entry is recorded first, followed by the credit entry, which would be indented. And then there will be an explanation of the entry to be followed after the credit entry. And it calls for the total amount of debits to be equals to the total number of credits. Each transaction must also at least affect 2 accounts. We will then post the general journal entries into the general ledger. So there will be no changes from journal entry. So for example, an account that is debit in nature in the general journal will also be debit in the general ledger. The general ledger allows us to know the balance of each account, since it's a listing of all transactions in a single account. Now that we have recorded everything into the general ledger, we will summarize using the pre-closing trial balance. For the pre-closing trial balance, is a list of the ending balances of all accounts in the general ledger, and at the same time, total debit should still also always equal to total credits. Alright, that's the end of my Mindmap sharing. Thank you so much.